There will be no quick video editing or flashy edits here, only useful practical information. And remember, the last point that we will consider is the most important. Enjoy the video. What if I told you the US economy just added nearly twice as many jobs as Wall Street expected, and the stock market crashed anyway? Today, we're breaking down the explosive May jobs report and the 4 other massive economic stories shaking America right now. If you want to understand where the economy, your investments, and interest rates are headed next, stay with me. Hey everyone, welcome back to the channel. We're talking record-breaking job growth, surging inflation fears, a brand new Fed chair, shaky consumer confidence, and what it all means for your money in 2026. Let's dive in. On Friday, the Bureau of Labor Statistics dropped a report that nobody saw coming. The US economy added 172,000 jobs in May. That's more than double the expected 80 to 85,000. Unemployment held steady at a very healthy 4.3%. The biggest gains came in leisure and hospitality, healthcare, and government sectors. This is the kind of number that would normally send stocks soaring. Instead, markets sold off hard. Why? Because this report makes the Federal Reserve's job much more complicated. Strong hiring usually means the economy is running hot, which keeps inflation alive. And right now, inflation is the elephant in the room. April's CPI jumped to 3.8% year-over-year, the highest reading since 2023. Core PCE, the Fed's favorite gauge, hit 3.3%. Gas prices have exploded past $4 to $4.50 a gallon in many states, largely because of the ongoing conflict in the Middle East disrupting oil flows through the Strait of Hormuz. Higher energy costs are feeding into everything from groceries to airline tickets. This is exactly what the Fed didn't want to see. Traders who were betting on rate cuts this summer are now rapidly repricing those expectations. In one of the most important transitions in recent years, Kevin Warsh, nominated by President Trump, has officially taken over as chair of the Federal Reserve. Warsh is known as a market-friendly but somewhat hawkish voice. He now faces an immediate dilemma. Trump is publicly pushing for lower interest rates, but the strong jobs data and rising inflation give him very little room to cut anytime soon. The next FOMC meeting, on June 16th and 17th, will be watched like never before. Will Warsh hold rates steady? Will he push back against political pressure? The tone he sets could decide the direction of markets for the rest of 2026. The second estimate for first quarter GDP came in between 1.6 and 2.0%. Better than the previous quarter, but still modest by historical standards. Consumer spending is holding up, supported by solid wage growth, but the University of Michigan Consumer Sentiment Index slipped in May to 93.1. Americans are feeling the pain at the pump and uncertainty about where the economy goes from here. The strong jobs report triggered a sharp sell-off. The S&P 500 dropped more than 2.6% in a single session, with tech stocks taking the biggest hit. Investors are now laser-focused on the upcoming May CPI print on June 10th. A hotter-than-expected number could send yields higher and stocks lower. We're in a classic good news is bad news environment. Strong economic data reduces the chance of rate cuts, which hurts stock valuations that have grown used to easy money. So what does all of this mean for you? The US economy is proving remarkably resilient despite geopolitical shocks. The labor market remains a powerhouse, but inflation is the wild card. The new Fed leadership will have to walk a tightrope between supporting growth and keeping prices under control. If inflation keeps surprising to the upside, expect higher for longer interest rates. That's bad for rate-sensitive sectors like real estate and growth stocks, but potentially good for the dollar and certain value sectors. Keep a close eye on next week's inflation data and the Fed meeting. Volatility is back, and smart investors are positioning accordingly. Drop a comment. Are you bullish or bearish on the US economy right now? Do you think the Fed will cut rates this year? If you found this breakdown helpful, smash that like button, subscribe, and turn on notifications so you never miss a critical update. Thanks for watching. Stay informed, stay sharp, and I'll see you in the next one.